My trading approach would be best described as I'm a Larry Williams student primarily. I have a good relationship with Larry. I've learned a lot from him over the years, and I would say that over the years I've kind of gone from being a completely mechanical trader to more of a discretionary trader where I sort of have fixed patterns I look for. But those patterns are in my mind very definitive, but if I were to have to write them down on the back of a business card, it wouldn't fit. In other words, there's some interpretation involved. So I think I'm reasonably strict in how I do it, but I think if I had to classify it would be discretionary. And how I apply them and when I apply them was also somewhat discretionary. So I'd say it's pretty much a pure discretionary approach with technical indicators backing it. My risk management is very, very simple. I risk no more than 2% of my equity in account at any time, period, no exceptions. I usually round it down, so I back my way into what my stop is on the contract I'm trading. And let's say, for example, 3 contracts takes me past 2%, then I would trade 2. If 10 contracts takes me to 1%, I'd trade more, to whatever the 2% of the total would be. That way, if I happen to have a string of 3 or 4 losses in a row, I've only drawn down 8% or less. And that kind of a drawdown is very easy to manage. And then I exit the trades basically on target objectives I develop and or trailing stops. I trade pretty much any liquid market. I want to see 10,000 contracts a day or more traded. So that eliminates some things like lumber, orange juice, some of these smaller markets. But other than that, anything that's a major market, from currencies to agriculturals to meats to stock indexes, treasury futures, I'll trade any of them if my patterns are there. The edge I have in my trading is, it would be best described as follows. The patterns I use, I won't use any pattern that doesn't test out at least 55 to 60% straight winners without any filters to it. It doesn't have to be 80 or 90% because I think patterns that test out at that high a level, I think you're playing with the numbers a little bit because life is too random for something like that. The world doesn't work in strict rules like that. There's more random activity in the world than I think most people want to acknowledge. So I'm willing to live with a 55 or 60% edge in something, and then I use it, I sort of leave it to my discretionary abilities to try to make that a little better by using good jurisprudence as to how to apply the trades when I see the patterns.